Hey guys, Frank Curzio here, no live video, and I'm sure you guys are gonna like the title. Have fun. Feel free to destroy me. I say that I'm an idiot, but I want to bring up something because numbers do matter. And I'm saying it, maybe I am an idiot and I don't get it, but I'm gonna share something with you. And before I do, if I had to ask you this question, right? I'm gonna ask you a question, and it's going to be earnings. So earnings from last year, what we reported at the end of 2019, how much do you think they would be down this year, right? With the whole economy off. Picture that percentage in your head. How much you think earnings are going to decline from last year to this year, right? When everything shut off. My guesstimate is around 25%. I don't know what you said, but it's important to know this because the sell side analysts, the smart people, so called smart people in the room, believe right now they're forecasting that we're only going to see a 10% decline in earnings year over year, right? That's their now. Let's say if they're right. You know they've been wrong this whole entire time. Let's say if they're right. One, it amounts to 148. That's a total number of earnings for S&P 500 companies, right? That's what they're going to generate. That's what they have right now. I think it was 163 or 167, whatever it was. But they're expecting a 10% decline now from 2019 to the end of this year, 2020. So that number is 148. So if we take that number and then we see, again, it's the P divided by E, right? Price divided by earnings for the S&P 500. Right now, based on their earnings, we're trading at 18 times forward earnings. So that's close to where we traded before all this nonsense, everything stopped, right? That expensive valuation, which we deserved, right? It was a huge growth market. Everything was fantastic. It was awesome. You saw very low interest rates. We saw earnings growth. We're heading to election season. I mean, we had a lot of tailwind earnings, everything, right? Everything was behind. It was great until this happened. Everything is shut off, right? So now we're trading based on 18 times forward earnings. That's if you think that we're only going to decline 10% in earnings. Now, if we take my 25% forecast, right, and I think that's kind of like in the ballpark. I mean, you're looking at travel, you're looking at energy companies, most retailers, most restaurants, outside of a few that deliveries is going okay, takeout, they're not generating any sales at all. No sales, no earnings, no nothing, and they still have no idea when they're going to turn back on. Nobody knows that. Is it going to be Easter, like the president says? We don't know. Could be much longer than that. We don't know. So you're looking at Apple. Apple's basically the biggest earning drivers in the S&P 500. Supply chains have been shut down for how many months in China? Now they're starting to open up. But everything else around the world, all the Apple shops are closed and no one's shopping and buying Apple products, right? You're not going to see earnings from that company. Strong earnings from that company. So if we take a 25% decline in earnings, that brings it to about 125, $125 in total earnings for S&P 500. That means we're trading at 21 times forward earnings. To put that in perspective, that's our most expensive valuation in close to 20 years based on today's move in stocks, right? A massive growth multiple. I don't know, that may make sense to you. To me, this is happening while not just our economy, the entire world economy is shut down. The entire world. China's barely coming online, right? My contacts tell me, again, it's not even close to coming back online. So you have, yes, stores opening up, but people aren't running into them right away. It's still going to take a long time. So at 21 times forward earnings, I mean, with zero, not even zero growth, we're going to see negative growth this year, and hardly any growth 2021, maybe. I mean, even when these companies turn back on, it doesn't mean that people are going to rush into restaurants, rush into stores, right? This is what we're anticipating, right? We're anticipating that the market's going to be stronger before this even happened, and that's going to be just 3-4 months away. That's what we're projecting with this move in the markets. Now, I'm going to let you know something because doing a lot of research on this. If you look at the past recessions and the past big market pullbacks, so you're looking at if it's 1974, 1991, 2002, we've always retested lows on every one of these. It didn't go down quick and stay there. It was always like this. The recent example is 2008. If you look at 2008, people think the market fell straight down in 2008. It didn't. So if you're looking at 2008, and this is for Dave Rosenberg, great research on this, where you're looking at February 2008, we're looking at a market, the S&P 500 traded at 1400. In March 2008, it fell to 1280, big move. From March 2008, went from 1280, and in May, a couple months later, it went to 1400. Went up a lot. And then by June, it fell and retested its lows. And then it fell even sharply, November 2008. Don't throw numbers at you. It's very, very important here because we didn't fall like this. We fell, went up, and then fell further. Okay, so the optimism being built in here, I mean, before we hit the 666 low on the S&P 500, is we're looking at the March lows. But what you're seeing in November 2008, we fell from 975 to 750, right? And that was just a month. And then from November to January, we went up from 750 to over 900 on the S&P 500. So it wasn't like a straight line down, but January to March '09, people forget the market crashed 27%, right? So there was a lot of false hope. I think that's what we're going through right now because we're expecting, I mean, for the market to be trading at these levels, even based on the analysts that you're looking at and the 10% decline in earnings, we're still trading at 18 times forward earnings, which is insane. That's a huge growth multiple that's deserved if everything's great, if the market's great, and it was great. The entire economy, the world economy is shut down. So if the entire economy is shut down, you think we should be trading at that multiple? No. But maybe I'm wrong and maybe I'm an idiot. That's why I thought that. So, I mean, I guess numbers don't mean a big deal, right? I mean, we'd have algorithms you're seeing, like even if you look at today's move, the 6%, I think it was like a 2% move in the last 10 minutes of the market, right? A lot of algorithm trading, a lot of bullshit you're going to see, just a lot of front running in the markets, which, the SEC will never address. But just be careful here. There are good companies. I'm not telling you not to invest in anything. We've been start picking away, and now the newsletter is going to do the same thing, but not every company. I mean, you're looking at airlines. Yes, they're going to get backstop. A lot of this stuff is going to get bailed out. But in the bailout, real quick, I like to keep these short, but you have to remember in the bailout, it's a lot different than today's markets because we went from buying assets that were just went to almost zero, right? All the home assets, and immediately they bounced back 2, 3 years later. Do you really think these companies are going to bounce back in earnings that quickly? Because we're assuming that's going to happen very, very quickly. Yet this is something that's going to change our lives. I mean, we're going to think about things differently. We're not going to jump on a cruise right away. Old people are going to go cruises right away. Are they going to jump on airplanes right away? So to assume that business is going to be 100% back to normal within 3, 6, 9 months is absolutely crazy. I'm hoping I'm wrong on this. Again, I hope everything goes away and everything's cool and everyone gets confidence again. Common sense says no. When you look at the numbers, man, it's really, really crazy where the market's trading. Just be careful if you think we have a bottom and everything's cool and you're going to buy here because it might be more risky right now buying some of these stocks than it was, when I call in mid-February, the market was going to crash 15% with China shut down and everything. So just be very, very careful out there. If you're in cash, you're cool. Don't worry about it. You're missing a nice move up to, again, in 3 days, what are we up 18% or something, which is pretty crazy, but we're still down tremendously. A lot of these stocks, financials, energy, retailers are still down over 20% plus from their monthly high. So just be careful out there. Numbers do mean a big deal. They usually factor in. Remember, earnings drive stock prices. We're not going to have earnings. I mean, and yet we're seeing the market go a lot higher here and rebound. And now it's getting to some crazy levels where maybe we oversold at 35%. Maybe it should be 30%, 28%. But to come back this much this fast, like everything's going to be okay, I ain't buying it. So, and again, maybe I'm the idiot in the room. So, Frank Curzio, find more of these videos, Curzio Research. Go to our YouTube page. Any comments, questions, frankcurzioresearch.com. And I'll report to you guys back soon. Take care.